It's been a very, challenging times for investment these days. I got a few people emails and asking me what's going on a bit with equities and currencies. It's been very challenging, especially for equities. First of all, equities facing a number of headwinds. First, we have the Federal Reserve. The Federal Reserve still on track to raise interest rates. That would affect this consumer spending, possibly, but also it would affect companies borrowing money from banks and so forth. So that's one of the headwinds that the equities are facing. The second one, and one is really most important these days, is also the tariffs, especially the trade. Everything involving trade. They got something done with Canada and Mexico, but now we have the potential. We have the big elephant in the room, China. There's a $500 billion deficit between the U.S. and China. And until they can get something done, and if they don't get something done, equities are likely to fall. But luckily, the advisors came out and they said, and even President Trump also said that it's likely going to be they're likely to do something. President Xi sent a list of items they're willing to do. This is a step forward. So that's another headwind. Then we had oil prices falling more than, I believe, 20% in less than a month. And that's really worrisome for a lot of countries exporting oil. Some emerging markets relying on oil, and also rising oil prices usually also a healthy indicator of the consumer around the world. So that has to be something that attracts investors' attention. So equities are being range bound and sometimes falling, and it's difficult to have a clear path to know where they'll be headed. So for equities, it's a little bit challenging. I have been staying away from them, or trading just purely based on the news that comes out, and maybe trading sessions like the European or the U.S. sessions. So it's been very challenging to have a clear trend on equities. Currencies has also been challenging, but I explained to a lot of people that the currencies are not an easy thing to trade. Everything that affects a currency can affect the import cost, what the consumer will end up paying, can affect the exports, can affect a whole bunch of variables for countries. So currencies are not like stocks. You cannot just treat them like stocks and so forth. What I've been doing, we've seen what happened with the pound, the negotiations with the EU. They came out with a draft for an agreement, but it was almost rejected in the UK. So the pound jumped one day, then fell the other day, jumped another day, and fallen the next day because of the uncertainty. So you have to kind of navigate, carefully, tread carefully when we're dealing with currencies. We had a number of Federal Reserve's presidents, including the chair, that came out this week, and they say they're concerned about global growth, which was a good sign interpreted by investors that maybe they're not going to move aggressively when pertaining to interest rates. So we've seen the dollar fall, so we were able to kind of look at the dollar fall and probably position ourselves a little bit. But currencies are being, especially these times where there are lots of uncertainties, central banks have to move cautiously when they deal with currencies. So lots of people had problems with it. We've seen gold jumped, maybe on the back of a falling dollar, maybe on concern about oil and geopolitical tensions. We've seen what happened for instance, between in Gaza, between Israel and Gaza and so forth. But looking at the currency picture is being very challenging, and until we have we know exactly what's going to be happening with the Federal Reserve, and exactly what's going to be happening in Europe, and also move away from headwinds like trade and stuff like that. We'll see central banks act in a cautious manner, So then we have to turn our attention to stocks, and people have seen it as we move along weekly reviews that we're focusing on stocks a little bit more. We called Apple that they will fall. Apple stock fell. A number of suppliers are seeing less demand for Apple products. We also talked about Home Depot, and Home Depot stocks fell on the back of a housing market in a difficult shape, as far as rising mortgage rates, rising input costs stemming from tariffs and so forth. So the demand is kind of bleak, and it affects stocks like Home Depot and Lowe's. Now this week we looked at Goldman Sachs on the back of the scandals. The scandal in Malaysia involving a Malaysian fund where people were able to embezzle funds using Goldman Sachs and so forth. And one Goldman Sachs banker has already pled guilty to. Another one is about to plead guilty. So until there's a full situation, transparency, Goldman Sachs continue to be hammered. But we've seen other stocks like JP Morgan doing well, and financial are supposed to be doing well by all metrics if we look at the consumer strength and rising interest rates. And also we're looking at NVIDIA, the chip maker that announced missed expectations in the earnings that they announced. And 2019 fall guidance is even worse, So on back of all of that, we continue to focus on the chip makers. Apple supplies a lot of these chip makers having problems, and also NVIDIA itself having problems. So that's something that we're looking into. So we've been focusing more on stocks picking as opposed to just equities and currencies. And also that Bitcoin fell more than $800. You see in the chart that Bitcoin is possibly heading lower, and this is something also that to look into if you're looking for a place to invest or to trade.